Roth 401k exposed. No, this isn't the financial version of Tiger King.
And nobody's going to tell me any otherwise.
But I am going to show you how a Roth 401k could make your retirement tax-free, or it could cost you tens of thousands of dollars. My name is Grady Cool, CEO of Cool Wealth Management. Today we are reviewing everything you need to know about a Roth 401k. Like almost everything in finance, the Roth 401k is not a solve-all perfect investment, but there are some circumstances where it is a fantastic tool. First, let's review how it works. Traditionally with 401k, you take your money out before you take the income taxes out, thus lowering your income taxes for the year. Then you would pay the income taxes later on in retirement. But you do get to avoid taxes on things like capital gains and interest payments while it's in there. It's like going out to dinner with your friends and saying,
"Put it on my tab."
But the tab's with the government and they don't forget. Ever. Now, the Roth 401k approaches it differently. You pay your income taxes for the year, then you can put your money in. This does increase your taxes for the year, but it does come out of the account tax-free. There are some trade-offs to be had. That raises the question, when should you consider a Roth 401k compared to a traditional 401k? First thing you need to consider is your income.
If you're Mr. Rich Guy maxing out the tax brackets,
then the benefits of being able to lower your income taxes is probably too much to pass up, thus making a traditional 401k probably a little bit more beneficial than a Roth 401k. Let's see how that works. If you're Tony, making $800,000 a year in the year 2025 with a federal income tax bracket of 37%, you're paying $296,000 in income taxes. That's a little painful. If you put $23,000 into a traditional 401k, then your tax bill is lowered to $287,490. That comes out to saving you $8,510 per year. Doesn't sound like a lot relative to $800,000 a year, but that amount can add up over time, year after year, especially with compounding. With a Roth 401k, you'll be paying that $8,510 every single year. Except you have to look at the flip side. What are we going to be paying in retirement? Really depends on what you're doing in retirement. No, I'm not talking about you
schooling Betty in some shuffleboard.
I mean with your income. The general idea behind a 401k is that when you reach retirement, your income will be lower, thus lowering your tax bracket, making it more advantageous to pay income taxes at that point. But that's not always how it works out for everybody. If you have a large investment portfolio, then you could still be pulling in hundreds of thousands of dollars per year from things like interest payments, dividends, and even rental income. That's why the Roth 401k can be a little bit more reliable when it comes to saving money on taxes. Your money comes out tax-free in retirement, so you don't have to worry about doing too well for yourself, which feels so weird to say in hindsight. We have to weigh the benefits of something that's better early in life, better later in life, and try to think out what our tax bracket and income might look like in retirement. That's a lot to consider. Not exactly the most straightforward decision in the world. And lo and behold, there are a few more complicating factors. Roth 401ks are not the most traditional thing in the world.
See what I did there?
They're a relatively new invention, so you need to check with your employer, assuming you don't own the business, if it's even available with your plan. And if it is, if your employer does matching your contributions, you have to check if they do Roth matching contributions as well. All right, so assuming all the details work out and you're putting money into your Roth 401k, what are some strategies we can consider? Honestly, there's not really that much to it. What type of assets work well in a retirement account tend to work well in taxable accounts as well. This becomes much more of a conversation around a general wealth management plan than it is just specific to this account, as far as things like cash flow timing and what timing of tax benefits look like for estate planning, but those are really the other two big things. If you have any questions around Roth 401ks, please let me know down in the comment section. And other than that, I hope you guys learned something and I will see you guys in the next one. Bye!